Everyone has been talking for several months now about ChatGPT. Really, at the core of that, we're talking about artificial intelligence, and people saying that the changes there could be swift. What are you anticipating in this space?
Well, we've been doing research on this space ever since ARK was founded in 2014, and we think it's terrific that finally something in the innovation space like GPT has captured both the consumer and the business imagination, and is really helping people understand that the world of innovation is changing very quickly, and the changes are pretty profound. I'm not sure if you've experimented with it, but from an educational point of view, it's going to change education. It's going to change work completely, even in areas like developers, engineering. We're seeing coding productivity go up twofold within less than a year. And we actually think that could go up tenfold. And of course, that's been an area of great labor shortages. So I know there was also an announcement today. IBM said it was going to hire no more people in the back office. And so for back office work, ChatGPT and AI generally is probably going to take the place of human beings. But it's in that regard, it's going to take people out of, some areas that are tedious, shall we say, and create other opportunities that we think are going to be pretty exciting.
Because that when the discussion is had around artificial intelligence, obviously there was excitement about what it can deliver, and I have experimented with some of these apps that you were talking about. But there's also, a bit of fear and trepidation among people about a change of this scale, a wholesale change almost, could be pretty disruptive for society.
I think you're right, and I think that we're going to need retraining and re-education. But these technologies are very exciting and also hold great promise for those who get on the right side of change. So I think just experimenting with ChatGPT, you see the power behind AI, and you can also see how you can learn a lot of these new technologies by yourself. For example, with natural language processing, we're all going to become programmers effectively. And now, a year ago, most people would think, "Oh, I could never be a programmer." But now some of our analysts have used Chat GPT to design their own website, copying another website. So and that's in less than a day. So it's pretty provocative. I think you have to really want to engage with it and experiment. And those with initiative and creativity, I think, are going to have a lot of fun and very enjoyable careers.
That's one of the big themes right now, AI. But I am noticing, now that we're in the thick of earnings season, we've had some of the heavyweight big tech names already report that a lot of them like to talk up artificial intelligence as well. It's creeping into everyone's statements and what they have to say about the future of the business going forward. What are you taking away so far from some of the big tech names we've seen this earnings season?
Well, I think that the larger platforms, the larger social platforms, are taking advertising share from the smaller ones. That's clear, and it's been a pretty quick shift, I would say. I think all of them were suffering last year, and the larger ones are now grabbing share. Yes, AI is discussed quite a bit in most of these calls. But we think that it's a real risk to a company like Alphabet. I have never really enjoyed Google search myself. I wish it could be smarter. I'm sure we've all had that experience. Well, guess what? ChatGPT, once they start pulling it through and including recent times as well, I think is going to usurp search. Now, Google or Alphabet says that it's on the case, and it should be, because it has some of the best AI experts in the world. It bought a company called DeepMind. But somehow they've been risk averse, and OpenAI has stolen the march with ChatGPT. And then the other thing with plugins and ChatGPT, we're trying to understand what will be the impact on Apple. It could be that ChatGPT will disintermediate apps with so-called plugins, and really just take us directly to wherever we want to go, whatever website we want to go. It'll anticipate it. So I think while mega cap tech recently has come on strong, we're looking at the disruption and disintermediation risks that they are facing here as well.
These are disruption, obviously, that will have longer term effects on the tech sector, shape the tech sector going forward. Right now, it's hard to ignore the fact that investors are concerned about slowing growth. We've heard that from some of the companies too, in terms of their clients getting a little more cautious on spending in the cloud and some other areas. Also, what the Federal Reserve might deliver, what the interest rate path is going forward. What should we be thinking about for the rest of this year in terms of some of the volatility out there?
Well, I think that, and it's really in the U.S. that we're seeing the regional bank fallout here, and I think it's accelerating, contrary to what Jamie Dimon said after buying First Republic, or parts of it, parts of it. We believe that the Fed, because of the Fed interest rate hikes, 20-fold increase in 1 year, that deposits are leaving the system and moving into Treasury funds. And Treasury funds do nothing but sit there. They can't be loaned out. They can't encourage business activity. Whereas deposits in banking system, the other side of those can be loans. And so we have a feeling that we've started in the early stages of a credit crunch that is going to be much more serious than I think most are expecting. I think that the regional bank index is beginning to telegraph that. It has broken down, which tells us deposits will continue to outflow until the Fed reverses its position, until the Fed pivots. And we do see, you mentioned the oil price. I think it has defied most people's expectations this year, especially everyone expecting China to come back once it dropped its zero COVID policy. And that has not happened. So something's going on out there that is broader than even the US. We do believe that there is much more weakness in the global economy than most appreciated. And I would say it's interesting because China was shut down for so long. I think we all expected a little bit more than we've seen. Some consumer companies have seen some activity, but the oil market has not. And one of the things that is going on, it doesn't seem like Russia has been forced to cut production. And it seems like it's still selling its production at a discount. And now that is beginning to infect the rest of the market.
In this case, NVIDIA, you had it on very, very early, and I don't think you missed out on it. So can you share your thoughts around this?
Rebecca, I want to thank you so much for setting the record straight. You and Eric Balchunas as well know that we've owned NVIDIA since inception. Some of our funds still own it. Our ARKQ fund and ARKW. In ARKQ, it's number 7. In Japan, we have 3 funds that own it. We have our Metaverse Fund, our Mobility as a Service Fund, and our Global Digitalization Fund. So they still own it. And as you know from our ETFs, we have taken profits. This stock has gone from $5 when we first bought it to $400. There's a lot of good news discounted in this stock, and we still think it will do well over time. However, there's a new group of stocks that are going to benefit from the foundation that NVIDIA has laid. NVIDIA is a hardware stock, and sure, it has some software. But the history of hardware and software is the bigger beneficiary over time is going to be software. And in our view, for every dollar of hardware that NVIDIA sells, software providers, SaaS providers, will generate $8 in revenue. So we are looking to the software providers who are actually right now where NVIDIA was when we first bought it. So NVIDIA was in the $5 to $10 billion range. Now it's $1 trillion, as you said. But we have software opportunities out there like UiPath in the robotics process automation space, Twilio. In the genomic space, we have Exact Sciences, Teladoc. We have companies that are, because of artificial intelligence, they are going to develop new businesses that we think are going to thrive. And right now, they are in that $10 to $12 billion range that was in place when we first bought NVIDIA. So we are really happy that investors who own benchmarks like the NASDAQ and QQQ still own NVIDIA. They own it in some of our portfolios, but we're on to the next thing.
So I think as one of the leaders in the AI space, a lot of people look to you to see where the future is going in terms of where we see AI going in the next 5, 10, 20 years. In our research, we predicted that AI ETFs would reach roughly 35 billion, correct, in 2030. Do you have any thoughts around this? We currently have roughly 70 ETFs that have artificial intelligence, AI, robotics in it, but where do you see the market going?
Well, we think this is a very large market, and we believe right now the hardware side of it is probably in the $30-40 billion range. So multiply that by 8, we see the software side going to 8 times that. But over the next, between now and 2030, we think artificial intelligence is going to add more value than any of our other technology platforms. In fact, it's going to catalyze them. We talk about Tesla all the time. It actually is the biggest artificial intelligence play, we believe, right now in our portfolios. It is the largest position in our flagship portfolio, ARKK. Why is this? Because autonomous taxi platforms, we believe globally, will deliver by 2030, $8 to $10 trillion in revenue from almost zero right now. Think about that. $8 to $10 trillion in revenue is almost half of the size of the U.S. economy. We think that's a global autonomous taxi platform opportunity, and we think it's going to submit to natural geographic monopolies. Tesla certainly in the United States and perhaps elsewhere. So you're going to be surprised at seeing who's going to, many people think it's just hardware and software stocks widely advertised, but Tesla, many people think is an auto stock. We don't. We think it's much more than that. But we think it's one of the biggest AI opportunities out there.
And you don't think the valuation for Tesla is too high right now? What would prompt you to sell?
Well, right now, and we're in print on this, Tesla's at roughly $200. We believe that in 5 years, 2027, it will be a $2,000 stock if our research is correct. Importantly, autonomous technology takes it there. If we're not right on autonomous, we still think that Tesla meets our 15% compound annual rate of return hurdle requirement, which means it would be at least a $400 stock just because of the massive shift towards electric vehicles during the next 5 years.
Of course, we know that Elon Musk has been meeting with the top leadership in China. What do you make of that visit, and how important is this market?
Well, Elon has always said he has been so impressed by the political leaders in China. He goes into the cities, and the mayors of cities very often are engineers, and they know exactly what he's talking about. So I think he thinks China is very fertile ground to become an exporter of Tesla vehicles, as it already is. So that's very high-end exports, which China wants. Of course, it wants EVs to proliferate in China, but it's got its flagship BYD and many other companies. The other reason I think Elon is there is maybe it's a little bit of a peace mission, because as I believe, as my friend and mentor Art Laffer believes, and as I think Elon believes, we're all better if we are communicating and sharing technologies and making one another's economies even better than they are now. So I think it's a little bit of that peace mission as well.
So I think if we look at what's happened since NVIDIA announced, from an ETF perspective, we've seen billions of dollars worth of inflows into whether that's semiconductor, tech funds, artificial intelligence. Everyone's piling in at the moment. In terms of how AI ETFs are, we found that there's really two types. The first type are ETFs that track AI companies, so the likes of your funds. But then there's also ETFs that utilize AI in terms of a quant strategy. It's a robo strategy. The fund will utilize AI to tell them which funds to buy and sell. A lot of investors have been asking, from an AI perspective, how should they invest into it? For instance, if we look at S&P 500 and NASDAQ, a lot of the top 6 names are similar. They're NVIDIA, Microsoft, Amazon, Apple. What are your thoughts on this when investors say, should they invest into AI or should they just go with a standard generic NASDAQ 100 index?
Well, we do think AI is going to be very fertile ground. We do have to pick. You do have to pick your spots. We're in a moment now where you're seeing a lot of companies slap an AI into their names, and this is where active management really is important. We think that there will be very many successors, but the most important, successful companies, but the most important ones we think are going to have visionary management. I mentioned Tesla as an example. Visionary management, AI and domain expertise, that should be a given. But perhaps the most important after those is large pools of high quality data that no one else has. So proprietary data. We mentioned with Tesla, it has billions upon billions of miles of real world driving data, so that it is evolving a system that will help people get from point A to point B in the quickest way and the safest way. That's really important, the safest way possible. And, we can look into whether it's our genomics names with Exact Sciences and Teladoc. Genomics, I call them multiomics as well. They have data that no one else has. Twilio has data in terms of the interactions between businesses and consumers that no one else has. Zoom is going to be announcing new products, I think, in early June, showcasing some of its AI products based on data. UiPath, again, in the robotics process automation space. This is a company that is advising companies now with their own large language models, advising them, how do we make you more productive over time with new business processes? We believe that, right now, our estimate is that there are $32 trillion globally paid to knowledge workers, and that is where we're going to see a lot of productivity gains. We may see displacement of some workers, but we actually believe that technology is a net job creator and that those people will go on to better jobs.
So I think if we look at AI, Goldman Sachs came out with a report that said they expect that the AI space will reach roughly $7 trillion in global economic growth. But given that we are in Asia, we'd like to know your thoughts on China, tech. What can you share with us and what can we expect to come?
Well, I have known for many years. In fact, I sat on a panel at the World Economic Forum it was either 2017 or 18, with the Minister of Innovation from China. China has had innovation as one of its priorities for a very long time. And we think that's the right thing to do. We know that common prosperity suggests to us two things. One, maybe profitability is not going to be as much rewarded in China, but the vast market in terms of, tier 2, tier 3, 4, and other tier cities will open up innovation and make many people's lives much better. So we think what you give up in margin, you might get in scale in China. But we do think it's very important that companies understand when they move into China, if they want that scale opportunity, they'll probably have to give up on margin in keeping with common prosperity.
Exactly. Do you expect technology and AI to evolve as fast in China as in the West, given, of course, some of the restrictions around in the country?
I think this might be one reason Elon Musk and others are there. They don't want to shut the country down, or they don't want China to be isolated, that the give and take has helped us for the last 20 to 25 years. So we're hoping that the restrictions do not impede innovation. I don't think that at the end of the day that the Xi Jinping administration wants isolationism to limit innovation. My experience in China and talking to people from China is they want to encourage innovation, but they want to make sure that it presents access, gives access to as many people as possible in the country.
Cathie, finally, for how long will the promise around tech, around artificial intelligence, be able to offset the reality of higher interest rates, also the pressure on the broader economy?
Yeah, as we always say, innovation solves problems, and AI, we believe, is going to cause a productivity boom. So to the extent that companies who are having to pay higher interest rates on their increasing debt need to find ways to save costs, they're going to look for technology to help solve their problems. And we think it will. And we also think, this is really important, we also think that AI is highly deflationary in the good sense. AI training costs are dropping 70% per year. That's massive deflation taking place, but it will cause a boom in activity associated with artificial intelligence. So we believe that companies are going to adopt it. We think that ChatGPT was that moment, and we're thrilled that it happened because finally people are looking at the promise of innovation instead of, over the last 2 years, worried about companies investing in innovation. So we think this is going to be a win-win. And by the way, if we're right on the deflationary ramifications of innovation here, then interest rates are going to come down, which will be a double benefit for innovation-based strategies.
You were in NVIDIA before it was cool. You were buying it at $4 back in 2014. You rode the wave on this particular stock, Cathie, to 330 back in 2021. But the recent rally you've missed because the flagship ARK Innovation ETF, you sold out of your main stake back in January. Why?
Yes. So if you... we're very positive on NVIDIA. We have been very positive on NVIDIA. We bought it down when it hit nearly $100 in the fourth quarter last year. And then it tripled as some of our other AI-oriented stocks stood still. So, we're looking at, believe it or not, many people do not believe this about us. We're looking at relative valuations of names in the AI space. And we were looking at NVIDIA at 25 times sales, which is where it is. And Tesla, which is probably the biggest AI story out there, is at 6 times earnings. UiPath yesterday, not earnings, 6 times sales. UiPath yesterday reported it is a beautiful AI play. It too is at 6 times sales. And as far as NVIDIA goes, there are a few reasons we take some pause. It still meets our minimum hurdle rate of return, so 15% at a compound annual rate over 5 years. And so you'll see it in some of our more specialized portfolios.
Yeah.
We're looking for the better values, but the risks to NVIDIA would include cyclical. When I hear shortages about GPUs or anything, I begin to think about the cyclicality of a group. Competition. Tesla is coming up with its own chip. Meta Platforms, Google, their own chips for more specialized large language models. And then the tech itself. We're learning from Meta Platforms, the Llama model is able to do with less computing power, but more data.
Yeah.
It's able to deliver better models. So there are puts and takes here, as there always are.
How many frustrated investors have got in touch with you via Twitter or the other forms in which you connect with your own purchases or the ETFs? I mean, there must have been a lot of frustration that you kept it in some funds, but not the main ARK ETF.
Well, I'll tell you what has happened mostly is people who understood the NVIDIA story, we were pounding the table on it on 2014, really till 2021. And many people actually put it into their own portfolios, and they may have held it. We have not gotten much pushback. And the reason is people know that we are on AI, but we're doing it in a little bit of a differentiated way. NVIDIA has become a check-the-box stock. That's why the valuation is where it is. But we are looking for those plays that have not only the vision from management team point of view and broad distribution, but also proprietary data and AI expertise. So we're just pivoting to another set of plays that most people have not discovered yet, much like they did not understand that NVIDIA was an AI play really until very recently.
So Palantir you mentioned, or UiPath you mentioned, Tesla you mentioned. There's actually quite a few, though. It seems relatively limited overall AI-focused names that you have. Am I missing something there? Are there far more AI exposure within your flagship fund, or are you really just deciding that there are going to be a few key names that you back?
No, Twilio would be another name. Almost every company, except for, well, actually, even including the multi-omics companies like Exact Sciences, are using their own proprietary data and their broad distribution networks to gather information and create better products and services. So I would say almost every company that we have in the portfolio is in some way, shape, or form. We ask the question, how are you harnessing this powerful tool called artificial intelligence? And I would say 90% of the names in the portfolio are harnessing it and do have proprietary data.
What caught my eye, and we've actually seen so much disruption already to the market capitalization of companies when they have found themselves disrupted by, for example, a ChatGPT. I think of Chegg, the education company, but you noted that Apple, for example, its apps platform could be disintermediated by ChatGPT platforms. Is that a key company that we need to worry about being disrupted? What other names do you think that come to mind that maybe the market has it wrong on how much they could be overwhelmed by this new competitor?
Well, for Google, ChatGPT was either the worst thing that has ever happened to it or maybe the best thing. We tend to think it's going to be disintermediated, though, by ChatGPT and other chatbots. So we're not going to need the kind of search and therefore advertising that drives Google's model. So we do worry about that one. And as you said, Apple, there are many people who think that even Amazon is going to be disrupted not only by social commerce, so people just shopping through Instagram and other social media sites, Pinterest, but it also could be disintermediated as if consumers use ChatGPT and other AI tools to say, I want exactly this kind of item at the cheapest price anywhere in the world. And it would go directly to that source. So, any platform that has served as, an intermediary is at risk, we would say.
You've name-checked a couple of Meta's things now, Instagram, and you mentioned Llama. Is Meta something that you're doubling down on from an AI perspective?
So Meta is interesting to us. We do like what it is doing. We love its sophistication and the fact that Mark Zuckerberg is now prioritizing artificial intelligence as opposed to the metaverse, which was really what he was focused on last year. So yes, we're interested in Meta's play here. We don't have it in the flagship portfolio. We do have it in other portfolios.
We're speaking with Cathie Wood, CEO, Chief Investment Officer of ARK Invest. Just to go back to where we started in NVIDIA, is there any entry point that gets you back in? You've actually been selling out from some of the other funds a little bit, perhaps with the profit you've recently taken in the run-up in the last couple of days. Anything that, despite its heady valuation, make you go, okay, it's not going to be disrupted in the way that we were worrying. We're not going to see the supply chain wreak havoc? Anything for a price, I would say. If this cycle were to worry, we tend to think we're going to have a harder landing than most economists do. If the cycle were to hit it, and NVIDIA surprisingly gets hit very hard by cycles because the inventory buildups, and I would say we're in one of those right now, are so spectacular. If we have a combination of a correction and the recognition by the marketplace, perhaps, that some of these models don't have to be as large and don't need as much computing power as more companies use more specialized models. You get the confluence of a reality check. NVIDIA is just a very powerful company. They are so exquisitely positioned in the space, but you're paying for it now. But having bought it at $4, how did it make you feel in your stomach when you saw 180 billion added in one day, like it did yesterday?
Well, the frustration yesterday was another one of our AI plays, UiPath, reported a quarter and revealed some products, AI products, and really opened the kimono a little bit more in terms of what it is doing on the AI front. And it's going to be one of the most interesting plays out there, I think. It was down 10% after beating numbers because it talked about the economy being somewhat variable, I think is the word it is using. It was focused on the macros, and that's what analysts focused on. Now it's having a good day. It's up about 10% today, I think.
Yeah, up 9% on the day. So you didn't feel any frustration about NVIDIA. You were more focused on UiPath.
Of course. And we publish our trades at the end of every day. And you'll see we bought UiPath in almost all of our portfolios, ARKK, ARKW, ARKF, ARKQ. We use those opportunities when we feel like the market isn't seeing something that we are, especially when it relates to artificial intelligence.
So tell us what you're seeing with XAI or with Tesla's focus on AI. Today, Tesla getting bought because it's done a deal with Ford on its electrification and indeed the way in which you charge your cars. But what are we perhaps missing when it comes to being the number one artificial play, as you just said?
Yes, the autonomous taxi network that we believe Tesla is building. It has more data. Talk about proprietary data. It has more data of real-world driving miles than all of the other auto companies and technology companies like Waymo put together around the world, we would say, except for perhaps China, because we don't know exactly what's going on there. And we do believe that the autonomous taxi platform opportunity is a winner-take-most opportunity. The company that gets a person in an autonomous vehicle from point A to point B as quickly and safely as possible is probably going to get the lion's share of the market. And that company will, in the United States, we believe, be Tesla. And we believe globally that opportunity will scale from zero today to $8 to $10 trillion in revenues by 2030. So you can see why we're so excited by Tesla. It is the furthest advanced from an AI point of view, and it's even becoming a manufacturer of factories using artificial intelligence and becoming more and more and more efficient in manufacturing factories and cars. We think it's the most efficient in the world now.
And manufacturing in China, Cathie. And I'm interested in, you reference this worry about, maybe it's not a worry. You talk about, at least in the US. Are you looking at China? You're remaining exposed to China amid the trade tensions and indeed the tech tensions?
Yes, our history with China after COVID was we plowed in during COVID because we liked what China was doing from a monetary and fiscal point of view. They were not overdoing it. And then, of course, we entered the period starting in November of 20, where, managements were basically banished from their companies, and there was one restriction and regulation after another. And so we've pulled away quite significantly. Common prosperity, it seems, means very low profit margins and services that reach into tier 1, tier 2 cities. So JD Logistics and JD, we have some of that, but we have minimized our exposure until China basically seems more inviting to capital once again.